Yes, people, a very, very happy morning to all of you. So, guys, we're going to start with a brand new topic today where we're going to learn about accounting standards. To be more precise, we're first going to understand what is the introduction of accounting standard. Then we'll understand in the next phase applicability of the accounting standards. Right? So, these are the primary topics relevant from the examination perspective. To be more specific, in this chapter, we're going to first understand what is the meaning of GAAP. Then we'll try to understand what is international accounting standard, how it came, who had set that up. Then we'll try to understand how IAS got converted to IFRS. Then we'll try to understand what is the accounting standard that is followed in India. So what is accounting standard in India? What is Ind AS? What is adoption strategy? What is conversion strategy? What is carve in and what is carve out? So you have to discuss in depth from this chapter. A good amount of weightage from this chapter you can expect from the examination point of view. Are you all ready? Can we start? Yes. Loud, yes. Yes, sir. Wonderful. The first point that we have to discuss is, before we understand what is accounting standard, we have to understand first of all what is the meaning of GAAP. GAAP stands for Generally Accepted Accounting Principle. I'm just reading this, but with this, I don't expect you to understand much. The explanation of that will be followed here. So I'm just reading it. It says that Generally Accepted Accounting Principles refers to a common set of, it is a set of accepted accounting principles, accounting standards, accounting procedure used by the business enterprise for reporting their transactions while preparing and presenting the financial statements. If anybody says, oh, perfect, sir, I understood everything in this line, you are a genius. You should be given directly CA degree. No need to do foundation inter also. No final also. Direct CA degree. Now let's understand this in simple words. Anybody who claims that I understood perfectly, I'll recommend your name to ICAI. Anybody here understood properly? No? Okay. Then which is all of us are on same page. Let's try to understand this in simple words. GAAP is a framework. It's a framework. It's a structure. You understand what is a frame? This flex is stuck on a frame. You can't see this flex going above and beyond the frame. It is stuck on the frame. GAAP is a framework. It's a structure that outlines. In the drawing, they say the sketch is outlined. In that outline diagram, you do the painting. You see the painting textbooks of LKG, pre-KG people, the color books that we have. In that, they'll have a shape outlined, diagram outlined. Within that diagram, they are supposed to do the painting. So GAAP is like the diagram within which you have to play with the standards. What standards? Accounting standards. So GAAP is a framework. It's an outline in which the accounting standards, principles, and procedures are supposed to be followed. In other words, GAAP is a framework that outlines what should be the level of your accounting standards. At what level you're supposed to do the accounting. What should be the standard of accounting? There's something called a standard of living. What is standard of living? What is standard of living? Quality of life that you enjoy. The moment you get up in the morning, you will not sit and prepare the tea. This one, a bad coffee. Yeah, say like bad coffee, bad tea. Ah. So there should be one staff who should guide you through bad coffee and bad tea. Correct? The moment you get up, then what happens? Brush, you will not take it. Somebody will come and give the brush to you, paste, apply on that and give you. That is quality of life. Breakfast, multiple options. Not one or two, multiple options. Again, prepared by chef. So all of that you take care of in your life, that is called a standard of living. High standard of living. Like that, accounting. For accounting also, there should be some standard. You can't do accounting the way you like doing, the way you feel like doing it. There should be some level that you have to maintain while you do the accounting process. So GAAP has outlined how the accounting needs to be standardized. What are the basic principles you have to follow while doing the accounting? What are the procedures that has to be followed while doing the accounting? They're given a broad outline structure. So GAAP is going to guide us how the accounting standards are set, how the principles are set, how the procedures are set in the process of preparing and presenting the financial statement. That is when you prepare the financial statement. When you prepare the financial statement. When you present the financial statement, there is a guidance that has been given. That guidance will help you to understand how the accounting needs to be done, on what principles the accounting needs to be done, what is the procedure to be followed to do the accounting. So that has been laid down by GAAP. So GAAP is like outer line boundary. You have to play within this boundary. You cannot go beyond this boundary. So GAAP is that outer line circle. In this circle, you as a country have the freedom to have your own accounting rules and regulations. So you can do whatever, you can come out with whatever rules you can come out, but you cannot override these rules and principles. Generally accepted accounting principles. However, GAAP is not a single universal law. It provides a broad, very broad conceptual foundation that allows countries to align their local accounting practices with global accepted norms. This is the outer line boundary. In this boundary, GAAP has said that this is what you have to follow. You can't deviate from this. If you want to prepare and present a financial statement, you have to present it this way. You have to follow these rules and regulations. Outer line broad rules is given. Now, all the countries, including India, we come within GAAP. We come within GAAP, and we try to adopt as it is the GAAP, or we try to modify the GAAP which suits our economic relation, economics of the country and the legal structure that we have, taxation that we have. In alignment of that, you can customize it. But you can't follow or fall beyond this circle. You can't fall beyond this circle. Whatever rules you want to recreate, modify, it has to be well within this circle. You can't go beyond this circle. This is an ultimatum given by GAAP to all the countries. So GAAP is basically countries, different countries from the world, they come together. They come and discuss on a platform. Okay, this is what is the best practices that is to be followed. So people from different countries, experts from different countries come together and have conceptualized this concept called as GAAP. Sir, what is covered in GAAP is something I'll be discussing next few minutes. However, GAAP is not a single universal law. Law means what? In country, let's say we have company law, you have to strictly abide by that law. You can't deviate from that. GAAP is not a law. They're not telling this is what you have to do, but they've given a broad structure. Means they're trying to make your life more flexible. In this flexibility, you can modify the rules according to your country's situation. GAAP is not a single universal law that you have to only follow. This is a broad structure. Within this structure, you can play however you want to play. Beyond this, you can't go is what GAAP is trying to say. GAAP is not a single universal law. It's a broad conceptual foundation that allows countries to align their local accounting practices with the global accepted norms. So GAAP is global norm. Within that norm, you can try to create your own norms, but you can't go beyond the global norms. And also adapt or create specific rules which will suit your legal, economic, and business environment of the respective country. Every country has their own struggles. They have their own legal applications. They have their own economic challenges. They have their own business struggles. Considering your legal, economic, and business situations of your country, you are allowed to modify the accounting standards, principles, but that should be well within the framework of GAAP. It should be within the framework of GAAP. You can't go beyond what GAAP is suggesting. Sir, what is there in GAAP, sir? You're telling so much that it's a broad concept. What is it consisting of? GAAP is based on universally accepted accounting concepts like going concern. The concept of going concern, which we studied in 11th standard, again in CA Foundation, and now in CA Intermediate. Going concern says what? What is the meaning of going concern? Business will continue for a foreseeable future, that is understood. But why this principle is being given? This principle is given by GAAP, which we have adopted as it is. In accounting standards, we say we follow accounting standards. What is the basic assumption of accounting standard? 3 assumptions. Going concern, consistency, accrual. So these 3 are part of accounting standard. An accounting standard is a part of GAAP. GAAP. AS is coming within GAAP. So AS says that what your basis of accounting or basis of accounting standard should be going concern, consistency, accrual. What is the meaning of going concern? I don't want this meaning. Business will continue for foreseeable future. With that, what am I able to understand? Please tell me. Exactly. So now, if I am buying a plant and machinery for 15 lakh rupees, matching principle says that since you are getting the benefit for more than one financial year, let's suppose I'm getting the benefit from this machinery for 15 years, then I should be recording this cost of the machinery, which is 15 lakh for how many years? 15 years. So every year, how much depreciation should I record? 1 lakh rupees. Matching principle says that record expenses to the extent you receive the benefit. The benefit is coming for 15 years. Then apportion the cost over a period of 15 years. Now, this matching principle is based on which assumption? Going concern assumption. Why? If this going concern assumption is not there, then what will the client do? When you say that, sir, this 15 lakh of machinery, I have to record 1 lakh as expense every year. Immediately client will say what? How do you know that my business will run for 15 years? What if my business will close tomorrow? So I can't record 15 lakh expenditure for 15 years. I will record everything in one single shot tomorrow. So we have to make the client understand, boss, you can't do that way. I understand there is uncertainty in the business. There's always some uncertainty in the business. But that doesn't mean that you think that, okay, I'll close the business tomorrow and everything you record from that point of view. So you have to keep your mind a little bit free. You have to believe that this business will run for a foreseeable future as long as you can. Keeping that assumption in mind, only then you can do the accounting. Just because my business will close tomorrow, everything if I start recording as expenditure today itself, then will it reflect a true and fair view of the financial statement? No. So we convince client telling that, no, we can't do accounting that manner. We have to follow going concern assumption. Means what? The business what you start, we believe that you will take it for a longer period of time. Longer period means what? 50 years, 100 years, 200 years. We'll keep that in mind and do accounting. So if that is the case, if the machinery has got a life of 15 years, then we believe that at least your business will function for 15 years. Keeping that in mind only, we will do the depreciation every year. So based on the going concern concept, the matching principle was established. Based on matching principle only, the concept of depreciation was established. So what is the first leg? The first leg is nothing but going concern assumption. If this was not there, matching principle wouldn't have come into picture. If matching principle was not there in the picture, depreciation wouldn't have been created. So this is step-by-step procedure. So who gave this going concern assumption? GAAP. So GAAP gave an outline circle. Within that, we try to frame our own rules and regulations. Are you able to follow? So the principles and the fundamental assumptions were being laid down in the GAAP. GAAP constitutes, the member of the GAAP constitutes of multiple experts across the globe. They come sit together, discuss the best accounting principles which we can follow. What is the best practice that we can follow? They come and give their own suggestions. And this gap cannot be made narrow because every country has got their own economic challenges. So we had to make the gap very broader. We had to make gap very flexible. Within this flexibility, you can try to modulate your standards depending on your country's economic, legal, and business circumstances, scenario, situations. So the concept of going concern was given by whom? GAAP. We accepted going concern as it is where? In the accounting standards. So the accounting standards, the going concern concept, where it came from where it came? It came from GAAP. Second was consistency. What is consistency? Whatever standards that you apply, whatever the rules and regulations that you apply in preparing the accounting of the transactions, you have to consistently follow. Which means what? Today, while preparing the financial statement, I did depreciation under SLM method. Tomorrow, I don't have the mood to use SLM method. I want to use WDU method. After that, next year, I want to shift to Mashina rate method. Then production unit method. If I keep on changing, what? The methods for accounting depreciation or the methods of accountings are constantly changed every year. What happens? The data is not reliable. The data is not comparable. Now, what is reliability? What is comparability? We'll discuss today. If you keep on changing your standards, people cannot have a trust on you. Today, you're good with one person. You're showing your good part to one person. Tomorrow, you're showing your bad part to the same person. You're constantly changing like a chameleon. Will people have trust on you? No. In this chameleon. I only studied chameleon. Chameleon is correct? Chameleon only, no? You know chameleon, chameleon. So like chameleon, if you keep on changing your colors, will your friends have trust on you? Like that, if the basis of preparing the financial statement constantly change like a chameleon, will the users of financial statement have the trust on you or on your financial statement? The answer is no. So whatever accounting method you're following, follow it consistently. You can change it, but not frequently. And even if you change, there should be a strong reason why are you changing it. As long as you're able to provide a reason, because of this reason only I'm changing my accounting structures or standards, then people might accept it. Oh, this is a reason. You can't change just because you want to change. Just because today you don't have mood to follow WDV method. That's why I'm going to SLM method. You cannot do accounting based on your moods. Today I did accounting. Today I recorded turnover on accrual basis. Tomorrow my mood is no, I'll do on cash basis. So 1 year accrual basis of recording revenue. Another year cash basis. Does it make sense? What is accrual basis of accounting? Record income when it is earned. Receiving money is not the criteria. That is accrual basis of accounting. So in 1 year, you did accrual basis of accounting the income. In the second year, you're telling that no, I want to do cash basis. Then the turnover of current year and the next year, can I compare it? Not possible. So who said that the accounting principles that you follow should be consistent? GAAP said it. And we adopted it as it is. We adopted it telling that, okay, we'll follow it blindly, consistency. We'll have all the accounting standards applied consistently throughout the all financial years. Next principle that was laid down by GAAP was accrual basis. What is accrual basis? Record income when it is earned. Receiving money is not the criteria. Record expenses when it is incurred. Paying money is not the criteria. This is what is being the base for accounting. So who gave this base? Even in accounting standards, we follow accrual. So for accounting standard picked up this concept from where? GAAP. So GAAP gave us this understanding. GAAP guided us telling that why accrual basis is correct, cash basis is not correct. Accrual basis means what? We understand that whatever effort I put in the current year, for which I've earned the income, that I should show as my income. Just because somebody did not pay the money, showing that as no income doesn't make sense. I gave service to all of you, let's suppose, throughout the year. I didn't receive money from any of you. So can I say my current year income is zero? My income is earned. How? Because I've completed my service in favor of you. I completed my service. I've earned it. Just because I've not received the money, it doesn't mean that I should not record it as my income. So everybody agreed, universally, globally, everybody agreed that yes, accrual basis of accounting is the best way of accounting. All the experts believed in the system than going for cash basis. But still in India, we are following in certain places cash basis. Because GAAP is what? GAAP is very flexible. GAAP says you have to follow accrual. But again, GAAP is giving what? Flexibility. Within this boundary, if you want to play, otherwise you can play. So who can follow cash? Who should follow accrual only? That has been defined by accounting standards. Are you able to understand? So GAAP is a broader framework. It is an outline structure within which every country has got their own rules and regulations. So 80% of the accounting standards of India, Ind AS, IFRS, everything is based out of what? GAAP. 80% is based on GAAP. Remaining 20%, 30% people have modified accounting according to their country's economic, legal, and business scenarios or tax scenarios, whatever it is. Prudence concept says what? Do not anticipate income, but anticipate your expenses. Sorry, anticipate your expense and losses. Imagine a scenario where there's a company who's into constant loss. Operationally, they're constant loss. Now, when a balance sheet is constantly showing an accumulated loss, where a P&L is having constant loss for a straight 4 years, will any banker, financial institutions, investors having any interest in investing in that company? No. Nobody will have the interest. Therefore, to attract them, what am I doing? I am revaluing the assets. I am upwardly revaluing assets. We have studied upward revaluation of assets in two places. One in 12th standard, when we did partnership. Whenever we do reconstitution of the partnership firm, revaluation happens. That is one where we discussed. Second, we discussed in internal reconstruction, previous chapter, where we studied that when we do upward revaluation of the asset account is debited and credit is to revaluation reserve. Credit to revaluation reserve, we discussed now. After standards, rules all came in. When the rules were not there, what people did, you know? They recorded that profit in the P&L account. Asset to P&L account, which means what? I converted a loss-making entity into profit-making entity. Land worth 1 crore, I showed 100 crores. So how much increased? 99 crore increased. What is the proof that this land is worth 99 crores? Is there anybody to give a proper certificate? Maybe they'll give, but that is their opinion. Land in one same area, the price could be different in two different places. I mean, in one area, if you take RS-Puram, in main road, there's a different price. In cut road, there's a different price. In multiple cut roads also, there are different prices depending on the width of that road. Nobody can say this is the exact price. So that's why people took an advantage of that and they try to overstate the asset value. So when asset is overstated, Asset is debited. And what credit do you give? Credit all income and gain. And that income gain, where they record it? In the P&L. So once that unrealized profit goes to your P&L, the loss-making entity now is converted to profit-making entity. This was something people did in past. I'm talking about 1920s, 30s, and 40s. Are you able to follow? Then GAAP said that this is a big loophole. We have to curb this loophole. You cannot anticipate the income. You have to have a prudent approach in the business. Prudent approach means what? You should anticipate losses. You anticipate loss and record, but you can't anticipate income. You can't fool around with people. You don't have income. So you're forecasting income. No. After 3 years, I'll get this much money. So that income I'm showing today itself, that you can't do it. People were doing this wantedly in the past. To cut that down, the concept of prudence was introduced, telling that you can anticipate, but not income. What should you anticipate? Losses. And losses also, when you anticipate, just like that, you can't anticipate. There should be concrete evidence. So in CA Foundation, when I dealt prudence concept, I told you on what basis the loss could be anticipated. For example, provision for bad and doubtful debts we create. Provision for bad debts we create. Provision for doubtful debt, it is created on what principle? Prudence principle, also called as conservatism principle. Now, what is the evidence for that? Why am I creating a provision for doubtful debt? Because that person who is my customer, there is a bankruptcy case, insolvency case running on him in the court, which means you have a fear that this money may or may not come. Judgment is not come. If judgment is come, then it is clear that money is going to come either or not going to come. All of you know, no? The court will appoint an official receiver. Official receiver will say 50 paise in a rupee will be received. The remaining will not be received. So after the judgment comes, everything becomes clear. How much is bad debt and how much is good debt. When do we create provision for doubtful debt? When the case is still going on. When the insolvency case is still going on, you have no clue whether the money will come or not come. So there's a doubtfulness in your mind. So prudence concept says that if you have a doubtfulness, you can record the provision. And provision I'm recording on the basis of what? The ongoing case in the court. Based on this, I'm recording, boss. Chumma, I'm not recording. Based on this, I'm recording. So whenever you create any provision also, just like that you can't create a provision, there should be something to substantiate. This, because of this reason only I created a provision. Imagine if this prudence concept was not there, everybody will start overstating the income. A loss-making entity, by anticipating their income, they can convert their loss-making company into profit-making company. So then everybody will trust that and start investing in that company. Imagine, KVA is in loss. But I'm overstating all my assets. I'm showing I have 100 crores profit and I take money from all of you. Is it right? I didn't give a true picture to all of you. I didn't give a transparent picture to all of you. I trapped you all. I took 100 crores from you. I trapped all of you inside. If that everybody follows, then what will happen? There'll be no trust. People will not feel like investing in any company. If the investment is not done, how will the company grow? If the company is not growing, how will the business economy grow? How will the country grow? So everything is connected to one another. Therefore, the government had to intervene, come between and give us all the principles, rules and regulations, how the accounting needs to be done, how the FS financial statement needs to be prepared, how it should be presented. The government got into depth. That's why we have so much of rules and regulations. If you understand the objective behind it, if you understand why this has happened, the history is known to you, why this has been studied, you will understand wholeheartedly. Materiality, matching concept, all this is the principle that has been laid down by GAAP. I'm not going too much into depth because this in depth I've discussed already in foundation, so I'm not going. Maybe if time permits, we'll discuss one more time. These concepts set the boundaries. Boundaries means what? Outline circle, within which the country shall form their own accounting rules. And that must be considered. That must means those accounting rules, what you are framing in the respective country, should consider these core concept of the GAAP, core principles of the GAAP. And you should not be contradicting them. Which means GAAP has given the complete principles, policies, standards, rules they have given, basics they have given. Within this rule, you can modify the accounting standards considering your own country's economic, legal challenges. Whatever rule you frame, it should be well within the boundary wall or within the framework of GAAP. It should not contradict GAAP. You should not say opposite to what GAAP is saying. If GAAP is saying we'll follow prudence concept, your accounting standard cannot say that prudence concept I'll not follow. If you say so, then you're contradicting GAAP. So you have to create your own accounting rules and regulations but well within the framework of GAAP. Are you able to understand what is the meaning of GAAP now? GAAP is an outline boundary which has been laid down by the professionals, accounting experts who've come together from different parts of the country. They have sat together and decided, okay, let's this be the outline boundary wall within which the rules should be framed. Now, this is a broader framework. Within this framework, we have multiple GAPs. India has created own GAP called as Indian GAAP. Under Indian GAAP, we have two standards. One is accounting standard and one we have Ind AS. USA does not follow Ind AS or AS. They follow separate something called as US GAAP. IFRS also they don't follow. IFRS is not followed by US. USA has got their own US GAAP. UK has got UK GAAP. At the global level, there are some countries who have come together, multiple countries together, who said that we will follow IFRS. So IFRS, international GAAP. Japan has got Japanese GAAP. So all this GAAP is coming within the framework of GAAP. Indian GAAP is coming within the framework of GAAP. US GAAP is coming within the framework of GAAP. So GAAP, you can say, is father of all these. So these are all sons and daughters. Within that, all these people. Now the question is, issued and regulated by. I'm not going this much in depth for now because I have a detailed discussion to be done here. This alone, I'll be doing an in-depth discussion. As of now, your accounting standard Ind AS is issued by ICAI. More specifically, there's a board under ICAI. There's a body under ICAI called as ASB, Accounting Standard Board. Accounting Standard Board is a part of ICAI. They formulate accounting standard, Indian accounting standard. Then they issue the Indian accounting standard with the approval of MCA. Now, what is the role of ICAI? What is the role of ASB? What is the role of MCA? What is the role of NAFRA? All that I meant to discuss. As of now, just understand this accounting standard, Ind AS. Major role is being played by ICAI and MCA. US GAAP is being framed by Financial Accounting Standard Board, FASB. UK GAAP, Financial Reporting Council. IFRS, International Accounting Standard Board. This you have to remember. Japanese GAAP, Accounting Standard Board of Japan. So all this comes within the framework of loudly GAAP. Now, why different GAAP exist? Why different GAAP exist? Why different countries have different GAPs? Because every country has a different legal challenges, economic challenges, business environment, and therefore it needs to be customized. What needs to be customized? The GAAP needs to be customized, keeping the foundation and the fundamentals of GAAP as a base. So you keep the foundations and the fundamental of GAAP as a base. So GAAP is base. Based on this, you will also apply your country's laws, rules and regulations, the legal environment, the business environment. You keep all that in mind, and on top of that, you develop something called as US GAAP, Indian GAAP, IFRS, etc., etc. Any problem here? Yes, Balaji, you have some doubt? No. Purpose of GAAP. Sir, why GAAP is there? What is the objective of GAAP? Very simple. To enable true and fair presentation of the financial statement. The financial statement that you're going to present, we want that to be true. Means what? It should not be manipulative. It should not be false. It should not be misleading. And the data that you present should be fair. It should not be unfair. Anticipating income is fair or unfair? Unfair. Anticipating too much losses unnecessarily, overthinking, again unfair. 1 crore is my revenue. I'm recording as 100 crore. Unfair or false? False. So true and fair are two different things. If I give the data which is misleading, that is false. Fair presentation, unfair means what? When I exaggerate something over a point, beyond a point, the fairness turns into unfairness. So they want the financial statement to be prepared, which should be reflecting its true and fair nature. Any problem? Next, they wanted a proper standardized reporting across the companies. If people are not given a set of rules and regulations, they will do the accounting in their own way. They will present the financial statement in their own way. There's no standardization. So everybody will do what they feel like doing. At the end, each report will look different. Each report will look different. Each financial statement will look different. Understanding of that becomes difficult. So to have uniformity, to have a standardization, there's a need for GAAP to be implemented. Next, improve comparability in the financial statement. Comparability means what? I should be able to compare my own financial statement of current year with the previous year. I should be able to compare my financial statement with that of my competitor's financial statement. So if my financial statement to be compared with my own financial statement, that is previous year's financial statement, should be compared with current year, means the basis of preparing that should be same. Last year, I prepared the financial statement on cash basis. This year, I'm preparing on accrual basis. Can I compare both? Not possible. I can't compare both. Cash basis means what? Record transaction, money is received. Money received, I recorded. And here I recorded when the income is earned. Both, does it match? Receiving money is a different aspect. Earning income is different aspect. So therefore, if you want to compare your own financial statement with that of previous year, then you have to ensure that the accounting policies, principles that you followed in the previous year versus current year, both should be same. Not just that. Okay, why do we do comparison of our data of current year with the previous year? To see whether we have grown from that or not. Last year my turnover 10 crores. Current year turnover is 12 crores. So current year my turnover is more by 2 crores. Good feeling or bad feeling? Very good feeling. Now this good feeling came when? Only when you compared it. If you don't compare it, there's no knowledge. When there is no knowledge, there is no feeling. I'm getting a good feeling. No, last year 10 crore turnover. 12 crore, 2 crore, not that much difference. Okay, Yash is telling sir 2 crore, what silly difference? 22 crores, sir. Last year turnover 10 crore. Current year 22 crores. How much increase by? 12 crore increase. Now how is the feeling, Yash? Nice, that's all. He's like, sir, what 12 crore, 22 crores? You talk 2000 crores. Then I will react. 12 crore increase. 12 crore increase. Good feeling. This good feeling came when? Only when you compared. So comparison of the current year with the previous year is done so that you can check your growth. Is my income growing or not? Is my expenses comparatively in same proportion growing or reducing? If it is not growing, if I'm not growing, then there's something flaw in my business system. So I need to again change my business fundamentals. That is what it means. Comparability gives you some analysis. Not just that, you compare your data with that of competitors' data. My turnover 10 crore, my competitors' turnover 15 crores. Everything is same classroom, everything is same. Still there's a difference of 5 crore rupees. Why? I will sit and analyze. Based on this analysis, I'll get to know, okay, these are the loopholes in my business. Accordingly, I'll tap those loopholes. So all this is possible only when you had a financial statement to compare. Imagine my competitor is preparing financial statement in different manner. I'm preparing in different manner. Then can I compare it? Not possible. I'm recording depreciation. He's not recording depreciation. I'm recording depreciation. He's not recording depreciation. Obviously, when he's not recording depreciation, his profits will be what? More. Mine will be less. Then can I compare it? Is it comparable? No. So, the financial statement prepared by you and your competitor, the basis should be same. When the basis of preparing FS is same, then what happens? Comparability is also there. Understood? Why comparability is to be done? Why the bases are important? Yes or no? Yes, next, to enhance the stakeholders' trust by presenting a reliable financial statement. All the rules and regulations that has been framed, is to ensure that the data what you present in the financial statement should be reliable. It should not be false, fake. Based on that information, I should be able to take a reliable decision making. You give me a wrong data, which is not reliable. And based on that misleading data, I am investing in your company. Tomorrow, who will be in trouble? My money, what I invested, that money is in trouble. So the financial statement that you prepare should be reliable. The data that you present should be reliable. So the accounting standards, the rules, regulation, principle, procedure, everything is aimed to obtain a reliable financial statement. Everybody is working towards one direction to make the financial statement more reliable. Enhance transparency in the financial statement. What is transparency? You should not hide anything. For example, let's say on Reliance Limited, there's a complaint that has been put by a consumer, and that is for 25 crores. Reliance Limited is not accepted on that allegation. Reliance Limited did not accept the allegation, but the allegation is put by the consumer. Now this matter will be resolved where? In the court. In the court. Until the judgment of the court comes, there are chances that you might have to pay the 25 crores. Maybe yes, maybe not. 50-50. You can't say that I will not pay because judgment is yet to come. Judgment can come in anybody's favor. So which means the probability is still 50-50. So this information as a contingent liability, should I disclose in the FS or not? Yes. Why? Because I want to show my users, that is the stakeholders of Reliance Limited, should be aware of this. Because if the judgment does not come in our favor, then we may have to pay 25 crore. Paying 25 crore is not easy. Whose money it is going? Company's money. When I say company's money, at the end it is whose money? Shareholders' money. And you have hidden that information, which means you are not transparent. If you're hiding any information, then what you're doing is not right. Because if you hide information, if I want to make some decisions out of it, I cannot make any decision out of it. For example, when somebody is putting a case on Reliance Limited, and I feel that we might lose this case, I would rather try to withdraw the capital from the company rather than being invested. Which means my decision to stay invested in the company or not is dependent on this information. And in this itself, if you hide, then my decision, whether should I be invested or should I take out the money, that decision I cannot take it. Since you are not transparent, I did not know the information, therefore I could not take my money out. So my money also got stuck in the process. So you should ensure that the financial statement that you present should be having the transparent data. Any problem? So what are the aspects of the GAAP? GAAP talks about conceptual rigidity, means what? Must follow core principles like accrual and prudence. They've given a broad framework of accounting principles and standards within which you have to follow, and that is rigid. You cannot deviate from that GAAP. You can't deviate from the GAAP. You cannot have the accounting principles which is contradicting the GAAP. So GAAP is very rigid. Rigid in their own way, flexible in their own way. Okay, not okay. Now, framework compliance must present a true and fair view. The framework, the broader framework, what is the one word objective of having the GAAP? Sir, the accounts, the financial statement should reflect true and fair view. Legal flexibility. Yes, countries can modify the rules, but that should be well within the framework of GAAP. Customization allowed, but only within the GAP's foundational limit. I'm just giving a summary of what we discussed so far. Okay, not okay? Okay. Now, next point. Evolution of international accounting standard, that is IAS to IFRS. In 1929, something happened. Can you tell me what happened? 1929. Great Depression. Great Depression. What is Great Depression? Economy went down. We had Great Depression also is called as recession, global recession. Global recession. Global recession means what? The entire economy went down. It became very slow. People lost their buying power. Why the buying power of the people went down? Because their earning went down. Why the earning went down? Business went down. People could not buy. People could not sell. Nothing happened. People lost their jobs. When people lose their job, what happens? We don't have the staff to run the business. People are not buying. Expenses are heavy. Income is not there. The business is into constant loss. And we had a stock market crash. Wall Street, USA, had a big stock market crash. All the companies' stock prices crashed heavily. What happened thereafter? No business, continuous losses. To cover up the losses, we CAs back then in 1929, what did we do? We did makeover, not internal reconstruction. Internal reconstruction. We did false makeover. We started revaluing the assets, started booking the unrealized profits. We started doing the makeover of the financial statement to make the financial statement look much younger and profitable. So all kind of nonsense people did back then. And the financial statement that was prepared based on this nonsense did not reflect true and fair view. And all the accounting bodies, the government of the all different countries, they were at a state of shock, because if this continued, if this way of accounting continued, then what happens? The trust of the investors on the company will not be there. People will not trust and invest in the company. If you don't invest in the company cannot grow. The company does not grow, the country does not grow. So if you want to be a powerful country means what? How do you make yourself powerful? Today, India is quite powerful at the global level. How? By what gives you more power? Sir, Shaktiman, sir. Jing, 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 jing. Power is money here. Power is money. More money, more power. People say money is not everything. Money is not everything, I agree. But money is many things. Money is many things. Today we are dominating many countries. Why? Because power of money. Pakistan had sent drones, and our air defense system, what did it do? Shot it down. To implement the air defense system, what is required? Money. Paisa. We purchased so many Rafale jets from France. For that, what is required? Money. The more money you have, the more powerful you are at the global front. So when this kind of accounting happened, people did not trust the companies, and we refrained from investing in those companies. If the companies don't get the investment, if the companies don't get the capital on time, they can't do their business. If business is not done on time, the profit-making business eventually will be into loss. Correct, no? Therefore, since 1929 up to 1973, various countries, were thinking about what could be done so that we can boost up the confidence of the investors in the company. It took a lot of time to convince people. If I want to come up with some proposal, convincing you 30-40 people is a big challenge. Imagine convincing the different leaders of the country. How long will it take? It took several years. Not 1 decade, 2 decade, 3 decade, multiple decades it took to convince, to understand, yes, accounting has also got some important role. Otherwise, who modifies accounting? Tell me. Who gives importance to accounting? You as a businessman, will you give importance to accounting? That is the last thing that you want to concentrate. A person who is doing business from morning till evening, he wants to focus on buying and selling. Collecting money from debtors. That is his main focus. In between that, follow Ind AS, IFRS, standard, true fair, comparability, relevance, transparency. What will the businessman say? Do hell with your rules. I'm struggling in my business and you want to follow all this. So people refrain from these policies because following these accounting rules is not easy. It's very complicated. It is shifting our focus from the business to unnecessarily things. That's why we took a hell of a lot of time to understand this need of global accounting standards. And by the time this was done, it became 1973. So at last in 1973, what happened? In the early stage of 1973, what happened? We had formed a committee called as International Accounting Standard Committee. We means not India. We means not India. It is at the global level. A committee was formed called as International Accounting Standard Committee, IASC. Sir, what is the objective of this committee? The objective of this committee was to develop, promote international accounting standards. IAS. IA stands for International Accounting Standards. So first time at the global level, the standards of accounting were presented. IAS. So this IAS was drafted by whom? This IAS was drafted by International Accounting Standard Committee. They approved it. They guided people how the accounting standard needs to be interpreted, how it should be accounted, and how it should be presented. Everything was taken care of. So IASC ka objective was to develop and promote international accounting standard for what? For uniformity in the global financial reporting. For uniformity, we wanted the financial statement to be uniform, but not at the domestic level. We want it to be having a global reporting, which means that anybody who is reading your financial statement should understand. So we gave a universal language. So IAS was Universal Accounting Language. IAS were the first globally recognized accounting standards. The first accounting standard that we got at the international standard, international level, is called as International Accounting Standard. And this standard was developed by whom? IASC, International Accounting Standard Committee. Issuance of IAS from 1973 to 2001. All this is there in textbook, but in very, cramped manner. I try to make it in bullet points. From 1973 to 2001, the International Accounting Standard Committee issued 41 IAS. Like how we have 27 notified accounting standards now, IAS had 41 standards, international standards. These focused on what the accounting policy should be, what the disclosure requirement should be, how the income should be treated, how the expense should be treated, how the asset should be treated, how the liability should be treated. For each and every asset liability classifications, one standard were issued. Like now we have AS2. AS2 talks about the valuation of inventory. AS9 talks about how the revenue needs to be recognized. So like that, for each and every item, they came out with the standards. That is called as International Accounting Standards. So how many numbers totally? 41. Then in the next phase, what happened? In 2001, this IASC was scrapped and was converted to something called as IASB, International Accounting Standard Board. In 2001, IASC was restructured. In IASC, we had old people having old thoughts. So we had to remove the old people and bring in new people, energetic people who understands this in a more better way, larger way. We constructed a new board called as International Accounting Standard Board. In 2001, IASC was restructured into, so here also restructuring happened. In 2001, IASC was restructured into a more independent and a technically focused body named IASB. Which means the members of IASB were more independent. They were not too much influenced by other people. Which means the member of IASC were influenced. They did not have that much independence. Second, the members of IASC were not technically strong. They were quite outdated. So now we brought in new members who's got more technical understanding on the accounting norms. So we've robustly changed the entire format or the framework of the IASC, and we call that as International Accounting Standard Board. The restructuring aimed to give more authority, independence, and global legitimacy to the standard setting process. What is the objective of IASB? Objective of IASB to develop and promote IFRS, which means IASC stands for International Accounting Standard Committee. Were responsible to develop a standard by name International Accounting Standard. These standards were not very competitive. They were not very practical. It had a lot of flaws. To override this, they created a restructured board called as IASB. So IASC was restructured into IASB. What did IASB do? IASB tried to come out with new accounting standards called as IFRS, International Financial Reporting Standards. So wherever they felt that there are few IAS which is totally nonsense, they replaced the entire nonsense IAS with IFRS. Still, some IAS they felt it is reasonable. They continued that parallelly, which means a point was there where IFRS and IAS were being implemented parallelly. So now what is the objective of IASB? The objective of IASB was to develop and promote IFRS for a more robust global financial reporting. They said that the financial reporting what is done in IAS was not robust. It was not strict enough. We have to become more strict because whatever standards that IASC had set, that was not that much transparent. There was not that much understandable. There's some flaws in it. So we have to come out with more robust way of accounting standards so that the financial reporting that you do based on that, people have a reliance on that very comfortably. So we wanted a global financial reporting, better version than that of prepared under IASC. That is under IAS. Second, what did we aim at? What was the second aim of IASB? Global capital, global fundraising. What does it mean? I'm a startup in India. Any startup would require initial capital. As a founder of this startup, I may put some initial capital, but I don't belong from Ambani's and Adani's family. So we don't have crores of rupees initially to invest. So what do? We go for seed investment, fundraising, seed investment, angel investor. We go to angel investor for initial funding. Angel investor has got money, but limited money. So we do the first round, second round of raising with the angel investors. When that is also not sufficient, you look up to venture capitalist, a bigger player in the market who can do investment at the bigger level. Venture capitalist. Then we go to a bigger player called as financial institutions. Above and beyond venture capitalist. They come with more money. Sometimes financial institutions do not have sufficient funds to provide. Reasons could be multiple. Therefore, beyond the point, I could not raise the money from my country. At the domestic level, I had a restriction. So therefore, now I wanted to raise money from international investors. So far, we were playing with local investors, domestic investors. Now we want to go international. Now, the international investors do not understand your accounting standard. They understand global accounting standard. So which means if I was a startup intending to raise money from my foreign investors, for that they will go through my financial statement. If the financial statement is based on the Indian accounting standards, that is normal AS, they don't understand the language. Foreign people needs to be given a data in the language what they understand. So all the foreign investors wanted the financial statement of my company now in what format? IFRS format. So I prepared my financial statement in two manner. One, to satisfy my country law and accounting standard. Second, I have to prepare the same data in the IFRS format so that I can raise the money from the global market. Global investment needs to be pulled. For that, I had to comply with IFRS. Yes, following IFRS gave us advantage to raise the capital at the global stage. Not just that. If my business flourished, if my business was doing great, I listed my stock in the Indian Stock Exchange. If my business is doing above and beyond that, then I would want my stocks to be listed in the foreign stock exchange. The stock exchange outside the Indian country, outside India, is called as foreign stock exchange. So if I want my stock to be listed on foreign stock exchange, then my financial statement should be prepared on what basis? IFRS. So IFRS helped me to do global listing. The companies in India who wanted their stocks to be listed in the global market, what they did? They had to follow IFRS again in preparing their financial statement. So listing in the stock market of other countries, to enable that, IFRS was helpful. This is the advantage of people who adopted IFRS back then. IFRS are considered as principle-based set of standards and not rule-based. Can somebody tell me? This point I discussed in CA Foundation. IFRS are principle-based and not rule-based. What is the difference between principle-based and rule-based? For information, accounting standard is rule-based. Ind AS, Indian accounting standard is principle-based. So IFRS, Ind AS is principle-based, whereas accounting standard, AS 1, 2, 3, what we follow now, is rule-based. What is the difference between the both?
So rule basis we cannot change, like modify, customize. Principle basis we can allow customization.
Wonderful. Point taken. So in simple language, you have to tell. In the language what you understand. If I tell you, you must wear, that is in the class, you must wear only white shirt and black pant and come and attend my class, then that is called as rule-based. If I say you should come wearing the formal and neat clothes, that is principle-based. When I say that you should come only in white shirt and black pant, which means you can't wear anything else. So your flexibility is being curtailed, curbed. I'm making you, or the rules that I framed is very rigid. It's not flexible. But when I say, please come wearing formal and neat clothes, which means in formal dresses, you have a lot of options. You can play with a lot of options. You can come wearing normal shirt pant. If you want, you can wear a waistcoat over that blazer, anything. So when there is a flexibility in the accounting standard, we call that as principle-based. So IFRS and Ind AS are principle-based. They have some flexibility. Means what? We have multiple options in that. We have multiple options. But what did AS do? AS cut down those multiple options. They said, this is what you have to follow. Where IFRS and Ind AS is giving 5 options. AS is giving us only 2 options. Maybe 1 option or maximum only 2 options. That is rule-based and principle-based. Nowadays, this is in trend. In wedding functions, they have something called as haldi function. In Haldi function, they say that you have to come wearing only yellow dress. So when I give instruction that you should come wearing only yellow dress in that function, so that function is what based? Rule based function. If I tell you in the reception you can come wearing any formal attire, normal shirt, pant, overcoat, just blazer or overcoat with blazer, whatever you want to wear, you can wear it. Means I'm telling formal, I'm restricting formal. I'm not wearing you. I'm not making you wear the traditional dress. It's formal, but in formal also you have multiple option. Then that is called as principle based. I'll be to follow. In the reception, if you come wearing sherwani, then what happens? In reception, if you come wearing sherwani, I told formal, you came in sherwani, which means you violated GAAP. GAAP says what? GAAP is a broader structure. In reception, you can come wearing formal clothes. That is GAAP. In that, if you're wearing any type of formal cloth, or even if I specify where this can come, whether it is rule based or principle based, both are coming under GAAP. I am telling you, only come wearing white shirt and black pant. Black shirt, white pant will not look good. White shirt and black pant. Specifically, is that coming under GAAP? Yes. But it's more specific. It's more specific. Options are limited. So it is rule-based accounting standards. Where I'm telling you to come in any formals, in that multiple options I give. So you come within the formals. Formal is the GAAP outline structure. Wearing formal dresses, GAAP. In that, multiple options are there. But in case if you wear sherwani and come in the reception, which means you are contradicting GAAP. Can you contradict GAAP here? Not possible. I will understand the difference. IFRS are considered as principle-based set of standards and not rule-based. In simple language, principle-based means using broad rules or concept, not strict to fixed rules, and applying your judgment to record the transaction in a way that best shows the real meaning of the transaction, which means when recording a transaction, only presenting a data to make it more true, more fair, more understandable, more reliable, whatever you feel is appropriate, you can play within that rule. That is what is principle-based accounting standard. Principle-based accounting standard means a transaction, how I should record, how I should present in a way that my financial statement is reliable, comparable, understandable, transparent. For this to make happen, whatever it takes, you do it. So that flexibility is given by principle-based accounting standards. Whereas rule-based doesn't give that much. In rule-based, they're telling that you don't sit and apply your mind. I'll tell you what to do. You just follow. That is rule-based. So IFRS and Ind AS are what based? Principle-based. Whereas accounting standard is rule-based. Okay. What is the role and the function of IASB? IASB stands for International Accounting Standard Board. Before IASB, what did we have? IASC. What is the full form? International Accounting Standard Committee. IASC gave what standard? IAS standing for International Accounting Standard. Whereas IASB gave you IFRS. So IASC gave you IAS. IASB gave you IFRS. IFRS is a better version of IAS. The role and the function of IASB. Develop IFRS. The primary function and the role of IASB was to develop IFRS. IASB issued new accounting standard called International Financial Standard Report. Improve IAS. The role and the responsibility of IASB was that also to continuously revise and update the older IAS, because you can't scrap anything just like that. When we had Ind AS coming into our country, we never scrapped AS in the first place. So one set of people were applying AS, another set of people applying Indian standards. And IAS also, accounting standard also, wherever required, we try to improvise. AS3, what we are doing is now revised. AS3, we did cash flow statement. What is it? AS3 revised means what? Compared to the old cash flow statement, we felt that was very outdated. And in the today's scenario, that outdated version is not applicable. And what did we do? We came out with a new revised version of AS3. Same way, the role of IASB was not just to implement IFRS. Apart from that, whatever existing IAS was there, wherever it became outdated, you try to revise that. That was also one of the functions of IASB. So functions of IASB, two things. Existing IAS, wherever required, you upgrade to the existing scenario. And second, try to come out with new standard called as IFRS. Promote convergence. Work with national standard setters. Now, apart from this, what was the additional role of IASB? IFRS is a group, it's a committee. IASB, if I talk about IASB, International Accounting Standard Board. In this board, you have multiple experts across various countries. Now they came out with IFRS. Now they have to go and promote IFRS in every country. No? So IASB ka one more role was that they went and sat with every country, convinced them why you should be adopting IFRS in your country. So they came to India also, convincing us that why we should be adopting IFRS as it is. But we were brainy people. We said that no, we will not adopt your IFRS as it is. What will we do? We'll try to first understand your IFRS. Who said this? ICAI said this. We will try to understand your IFRS. We will take some points from it. And whatever points we're taking from it, I will implement that because that is what is suiting my rules and regulations of the country. So we will not adopt as it is. We will converge. We will converge. What is convergence? In depth, I'll discuss in next few minutes. So apart from developing IFRS and improving IAS, one more function of ISB was to promote convergence or adoption. Promote convergence or adoption. So few countries like Pakistan who did not want to put their mind into coming out with new standard, they adopted IFRS as it is. So any MNC company, multinational company is there in Pakistan, they are blindly following what? IFRS. In India, we did not adopt IFRS as it is. We converged. What is meaning of convergence? From IFRS, 80% data, for just your understanding, I'm telling 80% data we took. Remaining 20% data we left. Because that remaining 20% data, why we left is because that was not suiting our country. Our business environment was not suiting. It was not suiting our tax system. Therefore, we had to leave it. So what was applicable to us with the existing framework, we tried to converge it. So there are two strategies that people adopted or the countries adopted. One is adoption strategy. One was convergence strategy. Adoption strategy means what? Those who did not want to put their mind into the new standards to be developed, they adopted IFRS as it is. People who were brainy, who wanted to spend time to understand what is IFRS, whether it will suit my country or not, they had a separate committee in the respective countries where they try to understand IFRS, they try to understand their legal system and try to come out with a different accounting standards called as Ind-AS, which suits our country. So in India, we did not adopt IFRS as it is. We converge with IFRS through a standard called as Ind-AS. So apart from developing IFRS and IAS, the one of the work role of ISB was to promote adoption strategy or the conversion strategy across multiple countries. So works with national standard setters. ISB was working with the national standard setter. In India, we have ICAI is the standard setter. Standard means accounting standard setter. ICAI has got the role of setting the standards. So all these ISB board people were working with the different bodies of the country who were instrumental in developing the standards in that country. Why? Either to adopt IFRS as it is or at least converge with IFRS. They were requesting either you adopt it or converge. Why? Only then you can get global capital. Only then you can list your stock in the global market. Like that, they try to convince us. If you want the investors from outside the country to come and invest, if you want your country to develop, if you want your country to work with other countries, then boss, you have to adopt IFRS. If not adoption, at least do convergence. 80% at least you match. If not 100%, 80% you match with us. At least when you do so, we'll have trust on you, on your companies, on the financial reporting done by your companies. Then we will invest, or else we will not invest. Who said? IASB said. So IASB ensures that the financial statement provide transparent, comparable, same data across the countries. Same information, different manner. IFRS versus IAS. IAS was issued by IASC. IFRS is issued by IASB. What is the period of IAS? 1973 to 2001. During this period, 100% strict IAS was only followed. Whereas from 2000 onwards, that is 2001 onwards until now, we have to follow IFRS. Plus, wherever IFRS is not given the standards, there are certain places where IFRS is not given any standards. There we adopted revised IAS, not Ind-AS, revised IAS. So as of now, at the international level, predominantly what is being followed? IFRS. But wherever IFRS could not penetrate, we are still adopting and following what? IAS. We means international people. They follow IAS. 41 IAS were there. Out of that, many are scrapped and some are still in use. If you talk about IFRS, 17 major IFRS is there as of now. Sir, is IFRS there in our inter syllabus? No. Is IFRS there in the final syllabus? No. Is IAS there in our syllabus? No. Then why the hell are we studying this, sir? Because the introduction part of this is there in your intermediate. In-depth part, what is IFRS standards? What is IA standards at the applicability level? It is not there. Am I loud and clear?
Yes.
Am I loud and clear? But you need to know the history, no? Because tomorrow when you go and work in some MNC company where Indian accounting standards will be applied, one manager will be sitting on top of you. He'll have some kujli. Tell me, IFRS, who issued? You will say, what you should say there? IASB has issued. What is IASB? Before IASB, which was the previous board? IASC. IASC issued what? So when you see now, instantly the answer is coming. To that level, you have to study because anyhow the questions can come. Whatever we are studying now, it is not just from the exam point of view. Exam is relevant, no doubt. This is also important from examination point of view. But above and beyond that, in the practical life also you'll come across this. I'll be to follow. Yes or no? Yes. Now, what is the status of IAS? Some are still valid and used along with IFRS. IFRS is continuously expanding. So far, 17 IFRS has come. We'll keep on expanding beyond that. The IASB team is working on how further IFRS needs to be implemented or brought into picture. So they are still working on it. Any problem so far? Online people, comfortable? Tell
Yes, sir.
Now, point number C. Types of standards applicable in India. Standards applicable in India. What happened, Nishi? Why are you crying? Looking at your face, I feel like crying. Break? I'll break you. Why break? Such an interesting topic. No interesting. Not interesting. என்ன எப்படி சொல்றீங்க? 12:31 it is. So I'll give you 9 minutes break. 12:40 sharp dot. Confuse it. 12:40 dot will start. Thank you so much. Yes, people, welcome back to the break. So let's continue. The next concept that we have to discuss is to understand what are the different types of standards applicable in India. So we have two standards running parallelly. One is called as Accounting Standard AS. We have the complete coverage of all the AS at the CA intermediate level. Next is the applicability, understanding and the applicability of the Ind AS. All this AS is covered in your final level. But definitely now we will try to understand what is Ind AS, what is AS, and what is the difference between the both. And then after this, we'll understand accounting standards on the whole. Ind AS we'll study in the next level, which is CA final. Accounting standard. Sir, what is the meaning of accounting standard? Accounting standard is set of return policy. What does this policy say? This policy says that how an income should be recorded, that is recognized. How the expenses should be recognized. How the asset should be recorded. How the liability should be recorded. For that, there are multiple standards. How many standards they have? Initially, there are 29 standards. In that, AS6 and AS got deleted, removed. And now we have 27 accounting standards notified by MC. How many standards? 27 accounting standards. All the accounting standards put together are called as return policy documents. This AS is being framed by whom? Is formulated by Accounting Standard Board, ASB. International version of this is called as IASB, International Accounting Standard Board. Father, son, Accounting Standard Board. International Accounting Standard Board, father. ASB, son. This is constituted under ICAI. Constituted under ICAI, big brother. Big bro. So big bro is taking care of small bro. Any problem? No problem? Okay. Now, AS, what you are preparing? Who's preparing? ASB is formulating accounting standard. This accounting standard should be within what framework? GAAP framework. It should be under the framework of GAAP. Now you understood why I took GAAP? Because if I don't explain what is GAAP, you will not understand what is GAAP doing here. What is the purpose of GAAP? You will not understand. So GAAP has got a broader structure that you should follow prudence concept. There should be materiality. It should be consistent. There should be what? Accrual basis, etc., etc. So that broad framework is given by whom? GAAP. In that, few things we adopted as it is and few things we have modified. So this is issued by whom? ICAI for non-corporates. What is non-corporates? Sole proprietorship concern, partnership concern, LLP, business. All these business people have to follow accounting standards. These are called as non-corporates. Sir, are you trying to tell me a pav bhaji wala, pani puri wala is supposed to follow accounting standard? The answer is yes. You go and ask Babu pani puri wala, Anna, what is accounting standards? Tell. Na, accounting standards. Pani puri wala. That is the reason they have how many levels? Level 1 to 4. Level 1, that is accounting standards applicability. We'll be having a separate one class on applicability of accounting standard. In that, I'll tell you what is corporate and what is non-corporate. For non-corporate, how many levels are there? Why are we having this much level? Whether entire AS should be followed or is there any exemption available? I'll be discussing in the concept name applicability of accounting standards. In short, today alone you remember that there are accounting standards applied on two people. One is corporates. Corporate means I'm talking about companies and other than companies. Accounting standard is applicable on companies and other than companies. The accounting standard that other than company should follow is issued by ICAI. So ASB, which is a part of ICAI, will suggest this to whom? ICAI. ICAI through their notification will make this applicable on the other than companies. Which means any entity in India who's having the formation of sole proprietorship business, partnership business, LLP business, etc., all of them should follow ASB. Applicability of AS to them will depend on whether they are level 1 entity, level 2 entity, level 3 entity or level 4 entity. So when I discuss applicability of accounting standard, that time I'll tell you which of these people have to follow full AS and which of these people have to follow partial AS. That will be discussed at that stage. Whereas the accounting standard that is formulated by ASB will be made applicable on companies only by the notification given by MCA. Issued and notified by MCA. For whom? For corporates, companies and other specified entities. Companies and there are a few other specified entities. For them, AS is applicable. So who is formulating them for that? ASB is formulating. ASB will hand over this document to ICAI. ICAI will recommend this to whom? MCA. MCA cannot alone make the decision. So MCA will now consult whom? NAFRA. MCA will consult NAFRA. NAFRA says, okay, green signal. Then MCA will release the notification. Once the notification is released, then that accounting standard is applicable on corporates, companies. Now what I did is summary. Elaborately, I have to make you understand, first of all, what is ASB? What is the role of ASB? What is the role of ICI? What is corporate? What is non-corporate? What is MCA? What is NAFRA? Is what we are going to discuss in next 1 hour. Am I clear? This is a summary that I gave in the beginning. Now, step by step, post-mortem will be done. Post-mortem means post-mortem of the concepts. You don't think what you are thinking from the movies. Now, I will come back again this at the end. AS are considered as rule-based set of standards and not principle-based. So, accounting standards are rule-based, whereas IFRS and Ind AS are principle-based. Okay. Now, let's talk about the role of accounting standard board ASB ICA. What is IC? What do you call it? What is it? What is ASB? A part of ICA. What does it mean? Function of ASB is to develop and formulate accounting standards, like how international accounting standard was developed by IASC. The responsibility of developing IAS was with IASC. The responsibility of developing IFRS was with IASB. Now the responsibility of developing AS and Ind AS is both with ASB, which is son of IASB. Any problem? Online people, any problem?
No, sir.
Others?
No, sir.
Offline people, any problem? Now, the function or the role of ASB is to develop and formulate accounting standards. Now, how did ASB come into picture? How did ASB get formed? ASB was constituted by ICAI in 1977 because during that period, there was tremendous pressure from the international level. At the global level, there was a tremendous pressure on the government of India. You also should make some standards of the accounting. Therefore, the government in turn gave the pressure to the Institute of Chartered Accountants of India, where they created one separate body called as ASB. The functions and the role of the ASB was restricted to the development and formulation of the accounting standards. They did rigorous work towards the understanding of the business entities. How we can make this AS applicable on the business. So their role, the committee's role, the board ka role was to understand across the country. They used to go and see how can we make this applicable. So what is the primary role of ASB? To draft and formulate the accounting standards for India. In ASB board, that is accounting standard board, we have a lot of members. We have members from ICAI council. We have members from SEBI. We have members from RBI. We have members from IRDA. Means different bodies from different institutional bodies. Member from those bodies, some member from SEBI, some people from RBI, all of them become one member of ASB, which means ASB board comprises of a lot of professional people coming from different professional bodies. There were few people representing the industry. There's somebody called as industry leader who represents the entire business community. There's one person representing SEBI. There's one person representing RBI. There's one person representing C&AG. Comptroller, not controller, comptroller and audit in general of India. So we have big boards. We have CBDT, Central Board of Direct Taxes. So across multiple board, we had one representative coming from each and every boards. They all became the members of ASB so that we can take input from multiple people. So ASB board is not just only CA board. Does not have only CA. Apart from CA, we had other professional peoples also because we used to take the input from those people also. All of them put together, they drafted and formulated what? ASB. Any problem here? Not ASB. Accounting standards. All of them put together, they formulated, drafted accounting standards. Consultation. So who were all part of this? People from industry bodies, regulators, academician, professionals. So we had one member coming from each domain, constituting or becoming part of ASB. And whatever standards ASB developed, we just did not implement that. We also took an opinion from other members of the industry body, regulators, academicians, and professionals to take their input. That step-by-step procedure I'll discuss in next sometime. Issue exposure draft. Leave this for now. What this I'll tell you in some time. Now what happens? Once ASB is finalizing the accounting standard, they will submit that finalized accounting standard to ICAI Council. What is ICAI Council? Once you become a CA, you will understand that once in every 2 years, if I'm not wrong, they have council elections. Council level means they are those people who can take major decision makings on behalf of the CA institutes. So there are a lot of people who compete for that position. Even from our state, we have so many people who are standing in the elections of the council body. Regional level, central level. So I'm talking not regional level, I'm talking about central council elections. So once you become CA, you will be voting the chartered accountants to be a part of the central council. In Tamil Nadu, we have Rajendra sir, who's a part of again central council. Like that, we have so many people. So they take a lot of decision makings. They go and represent ICAI. They go and represent ICAI at multiple platforms. So if we have to go and talk or have a meeting with the finance minister of the country, president will travel, vice president will travel. With that, the regional council members also will travel. they'll together have some important decision. You and I, though we are CA, we can't go and directly interact with the finance minister. Whatever problems we have to, discuss, we put forth in the council. Council will take up this issue and deal with the respective ministries. Are you able to follow? So ASB will formulate this accounting standard and submit this to ICI Council. Now ICI Council will issue the accounting standards and you have to follow if you are a non-corporate. But if you are a corporate, what ICI is issuing the AS, that no need to follow. Why? Because the hierarchy changes here. For corporates, the procedure is that ASB has to recommend that to ICI Council. ICI Council will recommend this to MCA. MCA will do consultation with NAFRA. What is NAFRA? I'll discuss now. If NAFRA says okay, MCA will release a notification. Only when the notification comes, you will be following the accounting standards. You means who? Companies, corporates. Submit the finalized AS to the council, who then recommends to MCA for notifying the AS to be made applicable on the companies. But MCA will notify only in consultation with NAFRA. Note, for making AS applicable on non-corporate entities such as sole proprietorship concern, partnership, LLP, trust, society, MCA notification is not required as it is implemented by ICAI itself. So let's suppose I'm a sole proprietorship concern, partnership concern. If I come under either level 1, level 2, level 3, level 4 entity, I have to follow accounting standards what ICAI is issued to me. I'm coming under the ICAI body. In other words, non-corporate entities are expected to follow ICAI issued AS based on the level of the entity as per ICAI level. So ICAI is given level. If you're coming at level 1, you have to follow these standards. If you're coming in level 2, level 3, level 4, you don't have to follow all the standards. You have some exemptions in it. What that is, we'll be discussing next class. Sir, is this there in my syllabus? 100%. Whatever I'm discussing from now, 100% applicable from the examination point of view. Further role of ASB. Whenever required, whatever accounting standards you have developed, you have to redevelop or revise, or whatever is not relevant, you have to withdraw that. So whatever the updates, mergers, withdrawal standards needs to be done based on the country's environment, legal, business, and economic environment. Considering that in mind, wherever required, you upgrade, revise. That's why we have AS3 revised. AS6 and AS got removed because of this only. Because AS6 and AS8 was no longer suitable independently. They got merged. Where it got merged, I'll be discussing in the respective standards. So, apart from forming, developing the AS, the role of ASB is again to revise and withdraw the standards wherever not applicable. Withdraw the standards wherever not applicable, improve or make the AS better, revise it wherever applicable to make it suitable for the existing legal environment. Any problem? Are you able to understand what is ASB?
Yes,
so ASB is a body constituted under ICAI. So ASB is in the responsibility, or ASB is with the responsibility of formulating the accounting standard, and they will recommend it to ICAI. ICAI Council will issue the AS directly to non-corporate entities who will come under level 1, 2, 3, 4. If the standards are to be made applicable on the corporates, then what should ICAI do? ICAI has to recommend this to MCA. Only upon MCA's notification, the companies have to follow AS, otherwise not required. But MCA, before giving the notification, they will take the opinion from NAFRA. It's an independent body of ICAI. So they take the opinion from NAFRA, and then if everything is okay, they will issue the standards made applicable on the companies. Understood or not understood?
Yes, sir.
Role of Ministry of Corporate Affairs, MCA. MCA is a part of your government. It's a part of the central government. Ministry of Corporate Affairs is being the responsibility of overlooking the functions of the companies across the country. If you want to form a company, you have to register with ROC, Register of Companies. ROC is coming under MCA. MCA is a part of your central government. So what is the function of MCA? They have the statutory function of notification and enforcement of the accounting standards. They have multiple functions. I'm talking from the point of view of accounting standard. Legal authority, empowered under Companies Act 2013. MCA under Companies Act 2013 is empowered to approve and notify the prescribed accounting standards. So central government through the Companies Act or the company law, that is in 2013 Act, has given this responsibility of implementing AS, and for that who has to notify? MCA has to notify. So MCA is the final authority to approve the accounting standard, which who has to follow? Companies has to follow. Who has to follow? Companies has to follow. If you don't participate, your brain will go into sleep mode. Once it goes into sleep mode, what happens? Whatever data I'm saying, it will go into your ears, but not be registered in the brain. Correct? No? And from this, you have heavy questions coming. Where? In your exam. So all those people who are thinking that I'm doing this for time pass, your thinking is wrong. 100% applicable from the examination point of view. Every single word I'm discussing is there in your study material. Take and see. But it is all scattered, elaborate, detailed. I'm trying to what do you call it? Comprise. Comprise is the right term? Compress, not compress. Compress. Yes. I'm trying to compress the data in a way that it makes more easy to understand and deal with. So please tell me, what is the function of MCA in the context of accounting standards? They have to do two works. One, they have to notify the accounting standard recommended by ICAI, and they have to enforce it also, which means they have to make it applicable and ensure that the companies follow. So this power MCA has got from whom? Government. Which government? State government? Central government? Donkey fellow, it is coming from the Act. This is why I'm saying concentrate. 3 times I read this point. Everybody is like, oh. When I ask question, donkey fellows. MCA has to notify accounting standard. They have to enforce that. Every company follows that. And this job, what they're doing, the empowerment of the job is coming from Companies Act 2013. The legal authority is coming from Companies Act 2013. Notification. MCA reviews the AS recommended by ICA, and then they notify them legally. They notify them. Only when they notify, the AS become legally applicable on the company. Sorry. And they don't do this just like that. They do this in consultation with the NAFRA. NAFRA, who is empowered under Section 133 of Companies Act 2013. What is NAFRA? I'll be discussing next. NAFRA is here. Don't give me face. What NAFRA? What NAFRA? NAFRA. Where is? Oh, sorry. NFRA only will come. Where is NFRA? I'll change that. Now, rules and framework. Notified AS. Now, ASB ka role is 2 things. One, they have to formulate accounting standard. Plus, they have to formulate Ind AS also. The responsibility of formulating Ind AS is also on ASB. So, ASB will formulate accounting standard and Ind AS. Both of these are recommended to whom? ICAI. ICAI in return will recommend this to MCA, which MCA has to approve. MCA will notify AS under Companies Accounting Standard Rule 2006. Whereas MCA is notifying Ind AS under Companies Indian Accounting Standard Rule 2015. Very, very important to be noted. Sir, one more time. Accounting Standard Board, son of International Accounting Standard Board, is instrumental in formulating accounting standard and Indian accounting standard, shortly and sweetly called as Ind AS. Whatever these people formulate, they have to recommend this to ICAI. ICAI in return will recommend this to MCA. MCA in consultation with NAFRA, they will notify this. Now, notification is done where, sir? If MCA is notifying AS, notification of AS is done under Companies Accounting Standard Rule 2006. Where it is done? So if I want to see the accounting standard is notified where will you go and refer? It is there in Companies Accounting Rule 2006. Whereas the notification of Ind AS, you will find it where? In the Companies Indian Accounting Standard Rule 2015. Very, very important. For a second, forget today's lunch, snacks, tea, coffee, dinner. But do not forget these 2 things. That important this is. Implementation. MCA did not implement this overnight. They implemented this in phased manner. In the first phase, they implemented this on certain companies. Example, any company whose turnover is more than 500 crores. You follow Ind-AS. Example. Like that, in phased manner, they implemented. So first they tried to implement the Ind-AS on the big companies. Then on big companies. Then on medium companies, small companies, then micro companies. Are able to follow? Like that, in phased manner, the accounting standard and Ind-AS were made applicable. When I'm saying in phased manner, I'm not just talking about Ind-AS. Even accounting standard was implemented on the phased manner. When accounting standard was created, it was not made applicable on everybody. In the phased manner, it was made applicable. Am I loud and clear? Specifies phased implementation based on the type of companies, their net worth, turnover, borrowing. Depending on all these factors, the implementation of AS and Ind-AS was done. Any problem here? Now, role of yes, boss. Both AS and Ind-AS is notified by MCA, only then it is made applicable on the corporates. Whereas accounting standard issued by ICA can be made applicable directly on the non-corporates. Ind-AS, I'm not coming there. Now I'm only focusing on AS. This entire discussion is for AS as of now. Ind-AS I'll discuss separately. AS to be made applicable on the non-corporates whose recommendation or issuing is sufficient. ICI's issue is sufficient. But if you want AS to be implemented on the companies, corporates, then ICI has to recommend it to MCA. MCA will take the consultation from NAFRA and then MCA will notify. MCA will notify accounting standards where? In companies, accounting standard rule 2006. Now clear? Now, role of NAFRA. NAFRA stands for National Financial Reporting Authority, NFRA. What is the function of NAFRA? Multiple functions are there. I am talking now in the context of accounting standard. To oversee and monitor the compliances of the accounting standards. Established under. So how did NAFRA come into picture? In section 132 of Companies Act 2013, they brought NAFRA into picture. So NAFRA was born in the Companies Act 2013 under the section 132. So this is a body independent of ICAI. Because ICAI, people felt, government felt, ICAI having an independent authority in the CA field, in the accounting standard field, they were, exploiting their, powerful situation in the country, or the power what ICAI has got. At one point, the government felt that ICAI was exploiting their power. They were trying to be unreasonable in certain places. So what they did is, they created a NAFRA, which is again a constituency of the CA with more professionals coming into picture who are questioning ICAI in every step. Imagine when Jio came initially, when we had so many telecom companies, what did Jio do? They gave the network free of cost, calling unlimited data, everything. So what did we do? We tried to switch over from the old network, that is Airtel, Vodafone, Idea, Aircel, Universal, whatever cell you say. We all migrated to Jio. Why? Here free, there cost. We all migrated. A point came where Jio got monopoly, literally kind of monopoly situation in the country. And because of that, eventually so many telecom companies shut down. Mergers happened. Vodafone, Idea could not withstand alone. So they merged together. Both the synergies were brought together so that they can withstand the heat that was coming from Jio. Airtel standalone basis still standing. So if we see big telecom operators, what do we have apart from Jio? BSNL. Again with one leg fracture, it is running. Airtel trying to manage, trying to compete very well. Vodafone, ventilator only, correctly said. Ventilator only. VI, literally a ventilator. Correct? No. Who else is there? Now imagine Vodafone, Idea, VI. From ventilator, they pass away. Airtel come into ventilator. BSNL gone. Airtel eventually gone. Which means Jio will be monopoly. Which means even if they ask you to pay 2,000 rupees per day, you will pay. Because can you live without data now? Without Snapchat, Instagram, Facebook, WhatsApp status. All for this, what do we need? Data. Without data, we cannot imagine. So they have made you used to data. First, free of cost. Now, some cost. Almost for on every connection you spend 800 to 1,000 rupees. Correct? No, nearly about 800 to 1,000 rupees you spend. A point will come where you'll have to pay even 2,000 rupees per day. And you will pay. No choice. When monopoly comes, what happens? The person takes the advantage. Correct? No. So now, government felt that ICI is into that situation. So they said that we have to create a competitor who can question them. So they created NAFRA. So NAFRA is a body who has got the questioning ability, question the ICI. Regulatory oversight ensures compliance with the notified accounting standards. So whatever accounting standards has been issued, they oversee whether that is compliant or not. Whether the companies are complying that or not, they overlook that also. Scope regulates and monitors large listed companies, banking and insurance companies. The insurance company, the banking companies and the large listed companies, NAFRA has got the role of regulating and monitoring them. Very closely they monitor. Audit supervision reviews auditors and audit quality of prescribed class of companies. So now, if you're in Deloitte, PwC, KPMG, you are all called as auditors. Your audit work, the quality of audit, what you're doing is been reviewed by whom? NAFRA. Earlier, this was not there. The review was there, but review was done by whom? ICI itself. So there, what happened? If father is reviewing son, ICI is father for all of us. We are small firms. Son, if father is reviewing son, if son does a mistake, what will father say? Nice beating he'll give. Next time, don't repeat it. We'll get the beatings, no doubt. Punishment, penalty, suspension. But again, he'll come back and do the same drama. Because ICI has got some soft corner for CAs. NAFRA is not like that. NAFRA is an independent body. NAFRA is like police. If you do something wrong, no beating, putting. Apart from beating, putting, jailing also. They'll take nice rod with oil. Tongue. That is the role of NAFRA. They are monitoring auditors. Whether the audit work is done efficiently or not. If not done, they'll question them. They have that much powers. You'll study this more in company law. Advisory role. They also do advices to MC on the matters relating to accounting and auditing standards. So NAFRA are the consultant of MCA. NAFRA is the consultant of MCA. On what matters does MCA consult with NAFRA? Accounting standards and auditing standards. Auditing standards you'll study where? In the audit subject, not final day. In inter-result you'll study. In the subject called as auditing. Because again, NAFRA is again, the base is what? The background people are who? CA only. But no relation between NAFRA and ICI. No relation between NAFRA and the audit firms. Okay, not okay? No energy. I'm going. Bye. I'm turning my chair. I'm going. I'll go. Okay, Sarah. Krishna is like, objective of accounting standards to ensure uniformity and consistency. Eliminate variations and ensure consistency. That is same accounting treatment for similar items. Means what? If you're following cash basis, only cash basis you follow. Sir, is cash basis allowed? Accounting standards for some entities, level 1, 2, 3, 4, there are no. In that, for some entities, they allow cash basis. But for majority of them, they have to follow only accrual. So those who are following cash basis, 1 year cash basis, 1 year accrual basis, that you don't do. Those who are doing depreciation, if you're following SLM, follow consistently SLM. 1 year SLM, 1 year WDV, another year SLM, another year WDV, that you don't do it. So whatever standards that you're following, whatever the rules that you're applying, apply it uniformly. And once you apply, follow that consistently year after year. That was one of the biggest objective of accounting standards. One of the biggest objective of accounting standards is to restrict those monkeys who jump from one method to another method, who can't sit in one place. They want to jump because we all come from monkeys. We all originate from monkeys. So we can't sit it down in one place. Like how you can't sit down in class and watch the class theory classes. You want to get up like this. Continuously people are doing. Why? Because you come from monkey history. So we have the habit of jumping from one standard to another standard, one method to another method. We don't follow things consistently. Therefore, AS came to restrict you from that jumping from one place to another place. Second, the financial statement, what you're trying to present, should be presented in such a way that people can understand. Present the financial information in a way that most of the people who know the basics of accounting can understand it without much difficulty. Anyways, financial statement can be understood only by those people who have studied commerce in 11th, 12th. You tell a doctor, engineer to go through financial statement, he will not understand, even though you make it easy, because he doesn't know basics of accounting. So what are they telling? You prepare and present the financial data in such a way that at least a commerce person who did 11th and 12th, at least, he should be able to understand. Forget engineer doctors, they will not understand. But if you are preparing a financial statement where even a commerce graduate cannot understand, then what financial statement are you preparing? The language should be simplified. The presentation should be simplified. That was one of the focus area of accounting standard, to present the financial information, to report the financial data in a way that most of the people who knows accounting can at least understand without any difficulty. Third, objective accounting standard. You will get a 4-mark question. What is the objective accounting standard? Very, very important. Those who are thinking chumma time pass I am doing, you will get this as a 4-mark question. Comparability. To enable intra-firm comparison of the financial statement. This we already discussed, so I'm not going one more time in depth. When I did GAAP, I told you, I want to compare my data of current year with previous year. I want to compare my data with competitors' data. So therefore, accounting standard should enable comparison, which means what? Whatever accounts you're preparing should be prepared on accounting standard, uniform accounting standard, so that I can compare my data of current year with previous year. I can compare my data with the competitors' data. So both the data should be based on accounting standard, based on the uniform accounting standards. And the financial statement that you provide to the users of financial statement, the reporting of the financials that you do should be reliable. It should be true and fair. So provide accurate and dependable financial information. Because if we provide misleading information, and based on that misleading information, if I invest in that company, my money will turn out to be in loss. My money will get lost there because they're misusing the funds. When they can provide the misusing data, they can mislead us with the data, then with my money, they can do whatever they want to do. So therefore, what is important? Provide the information which is reliable and dependable and accurate, so that I can make some important decision making. Decision making means what? Whether should I deal with that company or not? As a creditor, should I give my goods on credit to that fellow or not? As a banker, should I give my loan to that person or not? As an investor, should I invest my money in that company or not? So for that, what is required? Any bank, any financial institutions, any investor, any big creditor who wants to deal with the company, first thing that they will do is go through the financials of the company. So based on that only we decide whether the company is good or bad. So if that data itself is misleading, false, wrong, then I'll not know the real picture, true face of company. So if I invest by mistake in a villain, thinking that is a hero, gone. Heroine, gone. Heroine means your money, gone. Transparency and disclosure. The financial statement that you prepare should have transparent information. You should give adequate disclosure based on which I can make my decision making. Improve trust and promote ethical accounting standard, what you follow, and based on that, the financial statement that you prepare should improve the trust and promote ethical reporting to facilitate better decision making by the users of financial statement. The information that you disclose, you seeing that I should be able to decide whether should I give the money to the company or not. So give me the transparent data. Don't hide anything from me. Disclose everything properly. Don't disclose in cryptic words. What is cryptic words? In not understandable manner. You're just giving hint here and there. We're giving hint. They're playing treasure hunt with us. Like that, don't do it. Everything should be clear, crystal clear. Every information should be crystal clear. Any problem? Safeguard interests, protect stakeholders like investors, creditors, and government. So any entity who's following accounting standard, and based on the accounting standard, what financial statement they're preparing that will protect the interest of the investors, creditors, and the government. Because based on that information, investor can decide, should I invest the money or not? Creditor can decide, should I give the goods on credit or not? Government also can decide whether should we deal with that company or not. The financial statement that you prepare on the basis of accounting standards should reflect true and fair view of the financial statement. The financial performance and the position should represent true and fair information. Regulatory compliances, okay, I'm not going too much in depth. Now, next is very, very important point. Accounting standard deals with the following aspects. You will get a 4-mark question. What are the aspects with which the accounting standard deals? This is on your page number 1.3 of the ICA module. We have questions based on this also. The following aspects of the accounting transactions and event in the financial statements are being dealt with by accounting standards. So what are the 4 aspects that accounting standard deals with? Recognition, measurement, presentation, and disclosure. Again, a 2-mark or a 4-mark question, or could be a part of your MCQ. Mostly MCQ will be part of. Now, accounting standard deals with the following aspect in preparing the financial statement. First aspect. The first aspect talks about recognition of transaction and event in the financial statement. Means what? Accounting standard will teach us when to book a entry. Means when I should record my revenue, when I should record my expense, when I should record my asset, when I should record my liability. So an item or a transaction or an event, when I should record, that aspect I'm learning from accounting standard. So there are multiple accounting standard which teaches me the recognition. Can you please name any AS which talks about recognition of transaction event? AS 9 talks about revenue recognition. How the revenue should be recognized in the books of accounts. When to book it. When to book it. At what point of time, at what stage we have to book it. We have studied this already in the foundation. Income should be recorded only when the ownership of the goods is being transferred. That is nothing but recognition. When the ownership is transferred, record your income. Recognize your income. Record income means what? Recognize income. Recognize means what? Record. Recognize means what? Record. Any problem? What happened? Chumma, it is going on. No, record is done. Oh, you sorry. Now, example. For those who are on recorded mode, poda venna appdin solla student illamma camera venna. Okay, now disclaimer given. Okay. Sale is recognized when the risk and reward of the ownership has been transferred, not when the cash is received. Who is saying the statement? AS 9. So AS 9 deals with recognition of the transactions and event. What is meaning of transaction? What is the meaning of transaction? Again, 11th I discussed, foundation I discussed, inter beginning also I discussed. Tell me, exchange of goods, services, or funds, or all the above between two party. In that one party is company business, another party is third party. That is called as transaction. Accounting process we discussed. Accounting process is what? Accounting is a systematic process of identifying a business financial transaction or event. What is event? Result of transaction is event. So do we need to record event in the books of accounts? Yes. Can you name me 2 events? Closing inventory is what? Result of buying and selling. 100 chocolates I purchased. In that 80 chocolates sold. Remaining 20 is what? Closing inventory. Unsold stock. Unsold chocolates. Closing inventory. That closing inventory we are recording, no? What entry are you passing for that? Closing stock to purchases or closing stock to trading account. So this you are recording, no? Is this a transaction? No, it is a event. So AS teaches us. So which AS is teaching us to record this? AS2. AS2 talks about how to do the valuation, when to record it at the end of the year. So AS deals with primarily recognition of the transactions in the event. Any problem here? Camera paduthude. Now, forget motion, everything. You want to go to motion? Bathroom is there. Now, the next aspect of accounting standard is a measurement of the transaction event. Measurement. So AS2 teaches us how to measure the inventory. AS2 1 it is teaching that when inventory should be recorded. Second, if you're recording it, how to calculate the inventory. Inventory should be recorded at cost price or NRV, whichever is less. So how to measure that is being given by AS2. So AS accounting standard helps us how to do the measurement of the transaction event. Means how much to book, how much inventory inventory should be booked, how much inventory should be booked. All that has been dealt with accounting standards. Presentation of the transactions and event in the financial statement. AS will teach us how to present the transactions and event in the financial statement. Example for this can you give? AS3. AS3 cash flow statement. We are talking about AS3. We are talking about accounting standard aspect. So how the cash flow statement should be presented. First cash flow from operating activity, then cash flow from investing, then financing. With that get net cash inflow outflow, then add opening, then equal to closing. So this entire format is given by whom? Tell. Accounting standard. Accounting standard. When they prepare the balance sheet, left hand side should be liability, right hand side should be asset. This presentation who gave? I'm talking about accounting standard. Accounting standard is not applicable only on corporates. It is applicable on non-corporates. And for your information, Schedule 3 ka format is given by Companies Act. We are talking about AS now. Why Companies Act is coming between? I said the balance sheet that you prepare for a sole proprietorship concern, partnership concern. In that the balance sheet says left hand side is liability, right hand side is asset. Who gave that presentation format? Accounting standard. Accounting standard is coming from accounting conventions only. The best practices that we followed in the past. So that is what is imbibed in accounting standard. So where it is coming from? Accounting standards. How to present the financial data in the financial statement. How factor is being dealt with in the accounting standard. Presentation means what? How to present the information. Disclosure of the transaction and event in the FS. Disclosure of the all significant accounting policies. So in AS1 you'll study that why and how all the accounting policies you have to disclose. Why you have to disclose? How to disclose? AS1 will teach us. AS29 talks about disclosure of the provisions and contingent liability. If a consumer has filed a case on Reliance Limited for 25 crores and the case is still pending in the court, that information you should be giving where? In notes to accounts under contingent liability. Who mandated this? AS29. So multiple AS will give you the disclosure related information also. Where and what to disclose. AS29 says that disclose this information under contingent liability, not in financial statement, not in P&L balance sheet, but in notes to account. So where I should disclose, what I should disclose, that is been governed by AS. So AS is in principle governing these 4 aspects. So what are the 4 aspects that the AS has been taking care of? Recognition aspect, measurement aspect, presentation aspect, disclosure aspect. Any difficulty?
No, sir.
In your textbook, what has been given? That's all. What is recognition? What is measurement? What is presentation? What is disclosure? Nothing given. So what I did? Example. In simple English, I gave here also. So that it becomes easy to understand at a later stage. For this, what are you supposed to do? Appreciate, sir. Appreciate. Every time I only have to ask. Okay. All those who are thinking that this clap is for appreciating Pratik sir, you are wrong. This clap is for you. When you clap, your body vibrates. All those who are in sleep mode will come to active mode. That active mode will enable your attention in class. I can teach well. You can learn well. You can score well in exam. Now, accounting standard setting and implementation process. It is there on your ICA study module, page number 1.6 to 1.7. Page 1.6. Standard setting process. Very well within your syllabus. Don't think, sir, at Kujli, extra information is sharing. Nothing. Whatever is there in textbook only have simplified in the easy manner. Can we discuss? ASB, which is a body constituted under ICI, full form of ASB, Accounting Standard Board, drafts AS and Ind AS after identifying the areas and need for AS. Which and all areas we have to give a guidance. We have to give guidance for inventory recording. We have to give guidance for recording the revenue. We have to give guidance for how to record the depreciation. So they will first identify where and all people are having confusions, where and all guidance is required. Like how in 12th standard or after completing 12th, you had a dilemma. Should I do CA or not do CA? So who came to your rescue? Who came to your rescue?
CA.Prathik, sir.
Very important. What did I do? I guided you, gave a clarity. Consultation free of cost. Tell that also. Now, so ASB will identify the area where people are having confusion, where there is no guidance or misguidance. In that place, they will take up as a topic for discussion and they will think, okay, this is area which requires more clarity. So step 1 is identification of area. Identification of broad areas by ASP in formulation of AS. Then what they do? Constitution of the study groups for preparing the preliminary draft. PD stands for preliminary draft. What is happening here? Constitution of study group by ASB to consider the specific projects and to prepare the preliminary draft for the proposed accounting standard. The draft normally includes what is the objective of this standard. AS2, what is the objective? AS3, what is the objective? AS9, what is the objective? AS10, what is the objective? And the scope of the standard. This AS will cover which and all items. So AS2 ka scope is restricted only to inventory. Nothing beyond that. Like that AS10 ka scope is restricted to PPE, property, plant, equipment, which is tangible assets. Whereas for intangible assets, we have AS26. The scope of the standard has been agreed. By whom? These study groups. What are the definitions in AS2, in AS3, cash flow statement? They have to explain what is cash and cash equivalent. What is investment activity? What is finance activity? The detailed explanation should be given. No. So who does all this? These study groups. They define what is the objective, scope, definition of the terms in that AS, how to recognize, how to measure. Everything has been disclosed. How to present, how to disclose. Each and every standard talks about all of these items. Consideration of the preliminary draft prepared by the study group of ASB and revisions, if any, the draft on the basis of deliberation. So, based on the study group, whatever the study group is created, they will give some recommendations to whom? ASB. Study groups will give recommendations, suggestions, all these pointers to ASB. ASB will consider all of them and prepare a preliminary draft. So ASB will first identify the area where we need the guidance. And for that area, they'll form a small study group. Study group is not what study group you and I do. No. That study group is a group of a professional people. What they do? They sit and understand what is the scope of the standard, what is the objective of the standard, how I should recognize, how should we measure, how should we present, how should we disclose it. Everything is being given proper information. So they type everything. And this is given to whom, Nishi? This is given to whom? Accounting Standard Board. Now, Accounting Standard Board will consider all of them and prepare a document called as preliminary draft. Step 3. Circulation of the PD. PD stands for? Loudly, open your mouth and respond. Preliminary draft to the council members of ICI. Circulation of PD to the council members of ICI. Council members of ICI means internal members of ICI. ASB is a part of ICI. So first we will forward this to whom? PD will be forwarded by ASB to the council members of ICI. Then outside bodies will forward. Who are the outside body people? Regulators such as MCA, Ministry of Corporate Affairs, RBI, Reserve Bank of India, will forward that to SEBI also. We'll give the draft to SEBI also. We'll give draft to CBDT, Central Board of Direct Taxes. We give to CA and AG also. We give to scope also. There are multiple people, various industry bodies. To all these people will forward the PD. Why? To take their inputs, to take their feedbacks, ascertainment of the views from the different bodies of the PD. So all these people will give the views. All the views are compiled here. Once the views are compiled from these bodies, we will prepare a document called as exposure draft. What do we prepare? Exposure draft, called as shortly and sweetly ED. Now this ED, once it has been prepared, it will be given to general public, you and I. For what? Inviting public comments. So what we feel about this standard, we give input. Here we means who? The teachers who teach the subject. The auditors who are not a part of the council member, who are not a part of any of these regulatory body, firms, small firms, local firms, they will give their input. Public means who are professionals in this stream, they will give their inputs. Looking at the ED. Now, ASB will again take the public comments, review them, modify the ED, and then finalize the accounting standard. Once this has been finalized, ASB will recommend this to ICA Council. Finally, they'll submit to ICA Council, where ICA Council will approve the final draft of AS. And therefore, once ICA approves the AS is called to be as issued. But this issue of AS cannot happen just like that for corporate entities. So from here, two more tracks. Issue of AS. If you are a non-corporate, whatever ICA is issuing here, you can follow blindly. That standard becomes legally applicable on the non-corporates. Non-corporates are those people who come under level 1 to 4. But if you want to make this applicable on the corporates, then you have further steps. What is the further steps? To make it applicable on the corporates, MC has to notify. And MC will not notify without consulting NAFRA. So MCA notifies after consulting with NAFRA. NAFRA gives input if applicable. So NAFRA will give the input. MC will review and receive that input. Receive and review that input. And later, MC will notify under Companies Rule 2006. Once it has been notified by MCA under these rules, standard becomes legally applicable on all the corporates, companies. So this is how the accounting standard is made applicable in our country. One more time, let's summarize. What is the first step? We have to identify in which place the guidance is required, where people are struggling, in which segment people are struggling for accounting. Sir, I'm struggling in how to value inventory. So we identified the areas. Okay, let's take inventory as the subject. Then we try to understand what is the problem in that. So what happened? To understand the problem, they constituted a study group. So the study group will go and deal with all the industry people to understand what is the problem that they're facing. Based on the input taken by that, what they will do? They will now create the objective of this AS. What is the scope of the AS? How the recognition of the AS should be done? How it should be presented, disclosed, etc., etc. They'll give a complete list. And that list is called as PD. This PD has been prepared by the study group and handed over to ASB. ASB will review that and forward that to whom? ICA Council. ICA Council will do what? No. ASB will forward that not just to ICA Council. ICA Council is internal member. So ASB will forward the PD. ASB will forward the PD not just to ICA Council. ICA Council plus external bodies such as SEBI, RBI, MCA, CNAG, etc., etc. So now, once they go through, we'll take the views of those external bodies also. And once we incorporate their views in the PD, that PD now becomes ED. PD becomes ED. So between PD and ED, what is the change? The change is the input that we receive from the ICA Council members. RBI, SEBI, CNAG. That is the difference between PD and ED. Once ED has been ready, that ED is made public to that ED is made public. Means what? That has been issued to public for public comments for their reviews. So now all the public professionals will give the educational institutes, other members of ICI, everybody else will give the input. Once that input has been given, if ASB feels that input is worth it, they'll review the input. If they feel worth it, they will modify and finalize AS. And this finalized AS is been handed over to whom? By ASB to ICI Council. ICI Council will issue the accounting standards. And the accounting standard issued by ICI is applicable for whom? Directly. Non-corporate entities falling under level 1, 2, 3, 4 enterprises. But if you want the accounting standard to be made applicable to corporates, then you need the approval of MCA. So in turn here, in this case, ICAI will recommend this accounting standard. The AS which is approved by ACI is recommended to MCA for MCA's approval. MCA will not give the approval just like that. They will consult NAFRA. NAFRA will review. They'll give their own feedback. In that, MCA will again give the feedback. And accordingly, they'll modify. Only after everything has been satisfactorily done, based on the input given by MCA and NAFRA, then MCA will notify this in the. They'll notify this on the companies. To be more precise, NAFRA's input can be taken either from here or here. But why not taken here? Because here, after public comment, because NAFRA, if they give the update here, then again, based on the public comment, if you change, then whatever NAFRA gave the comment becomes useless. So the final authority is what? MCA and NAFRA finally to approve the document. So here, accounting standard, if you want to make it applicable on the corporates, you have to get approval from MCA. Only through MCA's notification, that the accounting standard is made applicable on the corporates. Any problem? Online people, any problem? MCA will issue accounting standard or notify accounting standard where? In the company's accounting standard rule 2006. This is where you can see all the notification of the accounting standards. Any problem?
No, sir.
Online people, any problem?
No, sir.
No, sir.
AS are developed by ASB of the ICI. AS cannot override the country's law and its local regulation. So while formulating AS, you have to take care of two things. One, you have to take care of GAAP, because AS has to be prepared within the framework of GAAP. Second, you can't override the country's local regulations or laws. So country's law and local regulation also needs to be taken care of. Keeping both in mind, satisfying both, only then you can issue accounting standard. Such is the big responsibility of the ASB. It's not a small, easy role. You have to have a complete knowledge of what is GAAP, what are the different laws across the country. Is any accounting standard overriding or contradicting any GAAP or rules and regulations? Everything has to be kept in mind. And then finally, what do? You issue the accounting standards. As of now, 27 accounting standards notified as per Companies Accounting Standard Rule 2021. Sorry, 27. 1 second. $27 only. No, I'm not saying this. $27 notified accounting standard as per Companies Accounting Standard Rules 2021. 2006 got improvised to 2021. Companies Accounting Standard Rule 2006 initial. Then the rule got upgraded and now it is 2021. Companies Accounting Standard Rule 2021 has replaced Companies Accounting Standard Rule 2006, amended from time to time, because 2006 is very outdated. Now it is 2025. So they said 2006 to 25, there's huge gap. We can't apply just that. So Companies Accounting Standard rule got upgraded. Like how from Companies Act 1956, we made 2013. Like that, 2006 was amended to 2021. Notified by the central government, an accounting standard issued by ICA. The Companies Accounting Standard Rule 21 will apply to the accounting period beginning from 1 April 21 onwards. So this point I'll implement in your note and give you. Because you might be wondering, sir said 2006 somewhere here. Where is it? Here. 2006 sir is saying here. Below it became 2021. From 2006 to 2021 there is a upgrade. Upgrade happened. So all the companies who are following the accounting standards with effect from 1/4/21, they have to follow the accounting standard rules 2021. Yes, Kana. See, this is for AS. This is for Ind AS. For AS, it is Companies Accounting Standard Rule 2006 initially. Now this 2006 has become 2021. Any problem? Any problem? Do you want to change back to 2006?
Sir,
Any recommendation? Should I pass it on to MCA? No? Okay.
India is still 2015.
That will come. No, I have not touched. Now, if you have energy, I will do Ind AS because Ind AS will also take a while. And Ind AS, why it is important? Because you have question based on this. What is Ind AS? What is carve in, carve out? You have a question from this. I can do next class, no problem. Very simple, Kana. What they're trying to say is that accounting standard was introduced long back. Accounting standard to be made applicable on the companies whose approval is required. MCA ka approval is required. MCA has to notify it. MCA initially notified where? In Companies Accounting Standard Rule 2006. But this rule became outdated. It was not relevant for that particular period. So what happened? They scrapped Companies Accounting Standard Rule 2006. And in place of that, they replaced something called as Companies Accounting Standard Rule 2021. So all the companies whose accounting period beginning from 1 April 21 onwards, they will no longer follow this 2006 ka rule. Everybody now they have to follow only 2021 ka rule. So for us, what is applicable now? Companies Accounting Standard Rule 2021. 2020, that is up to 31st March 2021. The financial statement that you prepared using the accounting standard was as per 2006 ka rule. After that, that is from 1/4/21 onwards until now, whatever the financial statement that you prepare based on the accounting standard, that is notified where now? In 2021. In 2021, it has been notified. So now if you want to go and check that this AS is notified where in MCA, where will you go and check? Companies Accounting Standard Rule 2021. This is the document that you will refer to check what AS is made applicable on the corporates. Yes, correct. So now you don't follow 1956 Act anymore because that is overridden by 2013. So now like that, whatever the rule 2006 is there, that has been overridden by 2021. Any problem? No problem. Can I shoot questions? We have class till 2 anyways. 12 minutes more are there. Can we do a quick revision?
Yes, sir.
Overall revision. What is GAAP? What is GST? Goods and Service Tax. Wonderful. When LKG student will answer in chorus, he'll have the discipline to answer in chorus. I agree that God has given me 2 years. That doesn't mean that 1 year will take one data, another year will take one more data. Both I'll process simultaneously. Can you do it? Not possible. One at a time. So big shot.
GAAP is generally accepted accounting principles.
Lovely. Go on.
So it gives a framework. Basically, it outlines a few procedures, principles.
Very good.
Rules that we should follow to prepare FS.
That we should follow means all the countries should follow.
Yeah, all the countries should follow to prepare FS and
to prepare FS, correct. So GAAP is generally accepted accounting principles is a framework. They give an outline structure of how the countries have to do the reporting of the transactions and even in the financial statement. But if any country could not follow that, GAAP gave a flexibility that you can modify according to your need, according to your legal regulations, business environment, country's environment, but ensure that the changes that you do does not override the GAAP. What I am saying that you should not override. Within that, you can play however you want to play. But you have to take care of one thing, that whatever rule that you're coming out with, that should ensure that the financial statement is true and fair. It is transparent, understandable, comparable, relevant, etc., etc. Those basic essence should not be compromised. Am I loud and clear? Okay. Now, every country has their own GAAP. In India, we have something called as Indian GAAP. US has got US GAAP, which means US is not adopting IFRS. There are other countries who are adopting IFRS. UK has got UK GAAP. Japanese has got Japanese GAAP. Clear this point? Which means GAAP has given the flexibility to the respective country to modify the rules, procedures, principles, however you want, but without compromising the framework of the GAAP. Okay, let's talk about the evolution of the Indian accounting standard. So after 1929, global recession, Great Depression, depression. I said what? Depression. Great Depression. Depression. What is the right term? Great Depression. Great Depression. What happened? Stock market crash happened. Why stock market crash happened? Because all the businesses at the respective level in front, they failed. And that impact was seen on the stock market crash. And therefore, to give a good makeup of the financial statement, people try to play with the financial statement. They try to do multiple things to ensure that a loss-making company looks a profit-making company. So therefore, all kind of nonsense practices they started adopting in the year back then. Therefore, the worldwide experts felt a need of having a common standards in which the accounts needs to be presented. We can't present the accounts the way you feel like presenting. You should have a level or a standard or a benchmark to prepare the financial statement. There should be a benchmark, there should be a level, there should be a standard in which you should be reporting the financial statements. So therefore, all the countries put together, they constituted a board called as IASC, called as International Accounting Standard Committee. So this committee had representatives from multiple countries where they understood their respective countries' practices and they tried to give a common input which is applicable to everybody or which can be made applicable to everybody. So therefore, the objective of IASC was to issue IAS, that is International Accounting Standards. So since 1973, from 1973 onwards, we started issuing IAS and it went on till 2001. And in total, 41 international accounting standards were made, that is formulated and made applicable. Then, over a period, we felt that this committee ka members are all outdated. They're not updated. They're not technically strong. They're not, dynamic to the changes that is happening dynamically. In the worldwide, a lot of changes were happening dynamically. To that level, this committee could not match up. So therefore, they said that you have to scrap IASC. IASC needs to be scrapped and we have to form a new board called as IASB, where new people, energetic people who understand the dynamics, who understand today's technicalities, they should come and take over the charge. So what they did two things. Wherever IAA was not practically applicable, they removed it. They scrapped it and they revised IAS wherever possible. But few places IAS could not be continued. So they again implemented something called as IFRS parallel with IAS. The purpose of IFRS was what? To have the financial reporting done in a very robust manner. So robust way of global financial reporting. IFRS intended to raise global capital. The Indian companies or the other countries' company wanted to go for global investors to make our company accessible to the global market, to global capital. We had to prepare the financial statement in the language what they understand. So therefore, all the Indian companies had to adopt IFRS as it is, because at that time, Ind AS did not come. Ind AS came in 2015 only. So until then, people had to follow IFRS. If at all you wanted to get money from the foreign institutions, foreign companies, and if you wanted your shares to be listed in foreign market, which means in that case, still you had to prepare your FS in the format of IFRS. So back then in those days, companies like Infosys and all, they had to prepare the financial statement in two formats. One as per accounting standard and one more as per IFRS. 2 times they prepare the financial statements. So IFRS is what based? Principle based, which means there are multiple options they've given to you. Whichever suits you, accordingly you can apply your mind and then decide, Jesh, yes or no. So IFRS is not rule based, it is principle based. Ind AS, principle based. Accounting standard, rule based. Rule based means what? This is what you have to do, no choice. Principle based means what? You've been given a choice. Within the choice, you can play with. So IFRS was given by whom? Issued by whom? IASB. Okay. In India, how many type of accounting standards are applicable? Two. One is accounting standards. Second is Indian accounting standards, which is called as shortly, sweetly, Ind AS. Okay. Who will issue AS? Who will issue AS? ASB will issue the AS. So ASB was formulated by ICAI Council. ICAI Council has formed a body called as ASB, who is responsible for formulating the accounting standard. So how did they formulate? What is the step-by-step procedure to formulate accounting standards? First, identify the area which requires the guidance. And then you create a study group. In the study group, people will deal with the practical people who are on field, industry people, to understand what challenges actually they're facing. Based on the input taken from them, what do? We formulate the objective of the AS, scope of the AS, how the item should be recognized, how the item should be measured, how the item should be presented, how the item should be disclosed. Everything is being drafted in a document called as preliminary draft. Then this PD was handed over by study group to ASB. PD was prepared by study group and handed over to ASB. ASB in return hand over this PD to whom? ICAI Council and all the external bodies such as RBI, SEBI, MCA, C&AG, etc., etc., etc. Then what happened? From these professional bodies, regulators, we got the input. We assessed the input. B means ASB assessed, reviewed that input, and based on that, they made necessary changes. And the change document in the PD, whatever change you made, the final version of that, what you got was called as exposure draft ED. Then this ED was made open to public. Public means all the academicians, the institutions, different other institutions, other professional people. They gave their input. Who has got the knowledge on the subject matter? They gave their inputs. Once their input was given, ASB analyzed what input they gave is sense or nonsense. If it was sensible, they implemented that and they issued it to, or rather, they finalized that AS and handed over to ICAI Council. What did ICAI Council do? They notified it and made applicable on the non-corporates who are falling under level 1, 2, 3, and 4. But they could not make this applicable on the corporates because there is one more level of approval there. Yes. Now, ICAI Council has to recommend the approved AS, approved by ICAI, that has to be recommended to whom? MCA. MCA, in consultation with NAFRA, will review it. NAFRA will give the input. Accordingly, the modification has to be done by ICAI, and then once that has been done, MCA will be issuing the notification. Initially, MCA gave the notification where?
2006.
Companies Accounting Standard Rule 2006. Later, the notification was done in Companies Accounting Standard Rule 2021. So now, from 1/4/21 onwards, whichever company is preparing the financial statement in accordance with accounting standard, that AS can be notified where? Or that notified AS where can I go and see? Companies Accounting Standard Rule 2021. NAFRA was formed in which year? Sorry, not NAFRA. ASB was formed in which year? 1977. Okay. Who gave the empowerment to notify AS? By MCA. MCA got his empowerment through Companies Act 2013. NAFRA got the power from where? Again, section 132 of Companies Act 2013 empowered NAFRA to do all this activity. NAFRA is independent of ICAI. Objective we discussed. What are the 4 aspects of accounting standard that it deals with? Recognition aspects, measurement aspect, presentation aspect, disclosure aspect. Accounting standard for non-corporate entities in India are issued by ICAI. Are you sure?
Yes, sir.
One C. No, I'm just trying to give you a feeling that whatever you studied today is relevant or not relevant. वापस कर लेंगे. क्या जा रहा है फर्क तेरे को? अच्छा, that way you're telling. Oh, okay. Sorry, I thought last में कर लेंगे, मतलब we'll do next class. Okay. Accounting standard. What is the accounting standard का role? Harmonize accounting policy and eliminate non-comparability of the financial statement.
Yes.
Improve the reliability of the financial statement.
Yes.
Both A and B. Manipulate the data of the management.
No.
Sir, this is big no.
Option C.
Confusion between A, B, and C. Harmonize accounting policy. What is harmonize?
Peaceful.
Peaceful.
Harmony.
Harmony means what? Have a uniform understanding. Live in harmony means what? Live with a common understanding. Peacefully with common understanding. So harmonize accounting policies and eliminate non-comparability. Accounting standard aimed at comparability. Aimed comparison. Non-comparison should be eliminated. Correct only, no? This is correct. Improve reliability of the financial statement. Correct. So both are correct, means which answer is correct? C is correct. Nice or not? Manvi, not nice? Nice. Now, it is essential to standardize the accounting principles and policies in order to ensure transparency, consistency, comparability, all of the above.
Option D.
So whatever we discuss is relevant?
Yes, sir.
Which committee is responsible? Which committee is responsible for approval of accounting standard and their modification for the purpose of applicability to the companies? MCA. How instantly answer is coming now? Global standard facilitates. Global standard. IFRS will facilitate what? Cross-border flow of money. Cross-border flow of money means what? Between the countries, there will be inflow and outflow of the money. We will invest in other countries will invest in our country. Comparability of the financial statement. Uniformity and transparency of the financial statement. All the three above. So 5 is what? D. All the 3. 4, what we did? B. 4B. MCA. 3 was D, which was all of the above. 2 was C. 2 was C. Now, theoretical question. This question answer.
Yes, sir. Theoretical questions.
This will do at the end. This looks like answer, man.
Yes, question is given as theory.
Here it is. Explain the objective of accounting standard in brief. State the advantage of setting the accounting standards. Brief explain the process of issuing Indian accounting standard in AS. We studied today process of issuing AS. Explain the significance of emergence of IFRS as global standard. Camera itself is saying get lost. Explain the significance of emergence of IFRS as global standard. What do you mean by carve out and carve in India? This I'll discuss next to 2 in next class. So whatever we discussed is practically applicable. Now, homework for all of you. Homework for all of you is that this entire theory, except Indian accounting standard, everything you'll have to go through and come back to me for doubts. If any particular point you felt that is not understood or not explained or not included in the notes, you can come back and tell me, sir, this is very important, please include. I'll include. So the entire theory, this entire theory chapter, the first chapter, you have to go through before we meet in the next class. When is next class? Friday. Day after tomorrow. I'll wind up the class. I'll take it after the class. Any doubts? Can I wind up? Chalo. So guys, that's all from my side for this session. I'll see you all in the next class, which is Friday morning. Until then, bye-bye. See you. Take care.